Discover 2 REITs that generated 80% returns in 1 year. Like our video and subscribe to our channel. We wanted to focus on a couple of stocks that have been tremendous winners this year in today's article. We'll focus on the property industries with the strongest pricing power, which is closely linked to their profits growth. Those who can drive rents higher than their expenses will be successful in 2022. In short, investors in these 2 REITs have had a fantastic year thus far, and we can see why based on recently released macro statistics. However, as you'll see later in this piece, we wouldn't be surprised if the Grinch, rather than cheerful St. Nicholas, pays a visit to investors in this area due to valuation worries. Keep in mind that when making investment decisions, investors must consider both quality and value. Let's take a closer look at our 2 highest rated apartment REITs, Mid-America Apartment Communities and Camden Property Trust. Keep in mind that, despite these exceptionally high-quality rankings, both stocks are still risky. Bullish on the Sunbelt. Over the last few years, we've written about the exodus from high regulation/high tax states and the accompanying move to the Sunbelt. Individuals and businesses have fled south as a result of recent tax code changes mixed with new social and commercial policies implemented in many of the nation's most populated coastal states in reaction to the COVID-19 outbreak. This tendency, we anticipate, will continue through 2022 and beyond. According to the Census Bureau, 2021 will be the slowest year for population growth in the United States since the country's establishment. The cause is a combination of increased fatalities caused by the epidemic, lower reproductive rates, and immigration. Lower birth rates have been in effect for some time, but the COVID-19 pandemic appears to have hastened this trend. Because of the fundamental structure of the supply/demand balance, significant population growth and increased population density are bullish signs in the multifamily REIT industry. With that in mind, we remain positive on the Sunbelt states, owing to the sustained population increase that this region of the country is seeing. Idaho was the fastest growing state in 2021, despite not being in the Sunbelt but sharing many of the same features as the southern states. Domestic migration gains were largest in Florida, Texas, and Arizona in terms of population, with net increases of 220,890, 170,307, and 93,026 persons, respectively. We also found it intriguing that the combination of fertility trends and domestic migration patterns caused New York to fall below the 20 million resident level, leaving California, Texas, and Florida as the only 3 states in the United States with populations over that barrier. Housing market is strong. While population growth in the United States has basically stalled, household formation continues to outperform supply growth in new construction, pushing the supply/demand measures of the real estate market further in the seller's favor. While supply challenges that peaked in 2020 have eased slightly in 2021, supply chain issues and personnel shortages in the building industry are still leading to near-record new house supply constraints. Vacancy rates in the single-family housing market have also dropped below 1% this year. Because of the high expenses connected with buying a home in today's housing market, people are continuing to opt for renting, which is leading to record rent growth. Furthermore, not only are rent rates rising quickly, but so are the values linked with apartment complexes. The residential index increased 19.2% year-over-year, a new high for the sector, and was only surpassed by the industrial index, which increased 22.1%, the quickest rate in the series history. In short, today is a great moment to be a landlord, therefore we're not shocked to see substantial valuation premiums associated to a few of the highest rated multifamily REITs. Our top-rated multifamily property is Mid-America Apartment Communities. Camden Property Trust, a REIT, is a close second. MA. When you look at MA's portfolio, you can see that the management team has showed tremendous foresight by aggressively investing in some of the most in-demand markets today. Furthermore, MA has made investments in very high-quality properties, with A/A+ quality accounting for 56% of its portfolio. As you can see in the chart below, MA's management team has put together a portfolio of properties that will profit from sustained Sunbelt migration, with job growth and household formation predicted to be much higher in its areas than the national average in the coming years. Given all of this, it's no surprise that MA has delivered consistently solid earnings for its stockholders over the years. This is especially true in the previous 5 years or so, since MA has not only delivered a solid OFO CAGR, but also a 5-year dividend increase rate of 5.4%. Camden. Camden has a little more exposure to traditional coastal urban markets, DC, LA, and San Diego, which are struggling a little. However, CPT has invested in an even higher percentage of A/A+ rated properties than MA, and if you know anything about our investment strategy at REIT, you know that we prefer best-in-class assets in the real estate space. These high occupancy rates are attributed not only to quality, but also to the fact that Camden has made it a point to invest in markets where the supply/demand balance we outlined before stays favorable to it. Valuation. The fact is that both MA and CPT are currently trading at valuation levels that are significantly higher than their long-term averages. Even with their strong forward growth rates, both firms are predicted to post double-digit OFO growth in 2022, we can't explain their current prices, even when using a PEG lens. These values are significantly higher than the stock's long-term average P/OFO multiple of 18.1x. The stock's 2021 rise has taken its value well above its pre-COVID highs, as shown by the pink line in the FAST graph chart above, which represents the 25x P/OFO multiple trajectory. We don't feel the stock's fundamentals deserve this premium yet again. Conclusion. This approach exemplifies why valuation is important, and it is important a lot. We'd love to buy into weakness in both of these stocks if it ever materializes, however, at this time, we believe that both MA and CPT would take a major sell-off to get to a point where the risk/reward equation associated with shares is an investor's advantage. From an operational standpoint, we adore the multifamily sector. The supply/demand metrics that fueled this subsector of REITdom surge in 2021 aren't going away anytime soon, and we expect rent growth to remain strong as we emerge from the COVID-19 pandemic phase. Thanks for watching. Please like our video and subscribe.